Our next guest is a Washington insider who's been tracking the Fed for years, so let's get his take on what's happening. Joseph LaVorgna is counselor to Treasury Secretary Scott Bessent. I said, I'm so glad you're on today, Joe. I'm
glad to be with you, Kelly, and glad to be with you, Brian. We're good friends. We go back a long time.
Yes. Oh, we go back. So I'm like, give me the spin. Is there spin on this, Joe, or
no?
Or
there's
what?
no spin. I mean, President Trump is very unique. He's a very special way he connects with the public. He voices his opinions. His opinions are known. A lot of people like the fact that he's like a regular Joe, not like me, but just sort of like he just says what he thinks. And he made it clear he's not going to fire Jay Powell. And the president should be able to comment on whatever he wants to comment on. I think
that's the message from you is he's made it. The president has made it clear he is not going to fire the Fed chair.
That's what he said. That's right.
Did he say that all the way, though? It doesn't matter. Tomorrow he could wake up and say, yeah, forget it. I'm sending the letter.
Yeah, I mean, I don't know, Kelly. I mean, the president has he has a way of communicating that makes him special and very effective. And I'll leave it there.
I was watching a show, Joe, called The Exchange with Kelly Evans, which is exactly right before this one. Kelly, you might know the show.
I did Worldwide Exchange with you at like 5 a.m.
5 a.m., 5 p.m. At this point, we love having you on at any time, Joe, so welcome back. But on The Exchange with Kelly Evans, she had Richard Fisher on, former Dallas Fed guy, probably your buddy. And he said something interesting. He said, well, if there was a chance, or something like this, Kelly, right, that if there was a chance there was going to be a Fed rate cut, now that is...
Forget it.
Forget it.
He said, forget July. For sure.
Do you think this will alter Powell's thinking?
No, I mean, look, the Fed has said that it's going to base their decisions on the data, which I think is understandably why the president is so frustrated, because the inflation data have been much better than expected. And yours truly, of course, the administration was on this before anyone else, the president and Secretary Bessent. But the argument that I'd made was that tariffs are not inflationary. They'll be absorbed in foreign profit margins, which they have been. And that the market was getting itself way excited about something that wasn't likely to happen. And the data have been much better. Even the sort of the pet metric that Jay Powell likes is the supercore metric, which is consumer services excluding rents. That's about 150 basis points lower than where it was last September when the Fed first began cutting rates. So I totally understand the president's frustration. But if the data continue to ease as we expect, and growth continuing to generate non-inflationary activity, and the markets continue to price Fed easing, history shows the Fed always follows where the markets are. So rates should eventually be going lower.
Joe, I take your point about, if we're not seeing a huge effect, although it was in the goods prices, as we mentioned yesterday. I just can't figure out if there's no U.S. hit here, then how are we raising $100 billion in tariff revenues?
Well, that's the thing. It's not even $100 billion, Kelly. We're at an annualized pace, depending on what you think the next, basically 6 months look like. We have June data. We don't have July.
Right.
But we could be upwards of $300 billion. And this is the point I think is key.
But those are Americans paying that, So
well,
in other words, let me just give an example.
No.
Let me just give an example. So Japanese car makers have been cutting prices, right? Which is a classic way of saying, look, the exporter's absorbing it. This doesn't even affect American companies. This is a win-win-win. Fine. But then if that's the case, we shouldn't be collecting any tariff revenue. So the fact that we're collecting possibly $200 billion tells you that the importers are paying that.
Well, no, not necessarily, no, because import prices, which we'll get tomorrow, have also been weak. So it's not just PPI, CPI, import prices. They've all been soft. In fact,
they're just not passing it along. But someone's clearly paying it.
I just want to just finish this. Yeah. So this is important, Kelly. But my colleague and the CEA, Stephen Myron, wrote a great paper. His team did a great job looking at import prices that would have direct impact from tariffs. Those prices actually fell. So what's happening is they're adjusting the price as it comes in, and they're building that tariff into their margin.
That's fine.
Americans
but they're paying it.
But they're not paying it, because if they were paying it, we would see it in the inflation data. And we know that the tariffs are there because, as you said, we're going to collect upwards of $300 billion in revenue. And again, this comes back to when I was in other programs, people saying in March it'd be there, in April it'd be there, in May it'd be there, June it has not shown up. And we don't think it will show up. And if it does, at some point, it will be de minimis. Yeah. And the burden needs to be on the people who are saying these tariffs are going to be inflationary. A similar argument was made that, well, we had this big inventory build in the first quarter, and therefore companies aren't going to raise prices, which made no sense because demand has been strong, and you're going to raise the price if you can get away with it. But the fact is the U.S. is the world's largest consumer. We dictate the terms. President Trump knows from a negotiating standpoint everybody wants to be in the U.S. market, and the U.S. has the leverage, and you just haven't yet to see it in any of these prices. I don't understand why the economics community is so dense and not understanding that.